Hi, good evening, friends. Thanks, Karthik, for this introduction, and thanks everyone for joining in this webinar. I think we all have seen very eventful last few days, and I think this webinar is just to give a free and frank perspective of what we believe has happened and what is our outlook going forward. So, obviously, speaking today after the markets have rebounded is much better, and I'm very sure a lot of concerns, a lot of anxiety, a lot of fright, which we have seen over the last day, in particular yesterday, should be behind us with the Nifty again bouncing back by almost 735 points and Sensex by almost 2,400 points. I think one thing which before we start, actually even yesterday when the markets fell, yesterday to Friday, which was the pre-exit poll level, markets were down only like 2.5%. And in fact, as we speak on today's close, Nifty at 22,600 odd, we are in fact nearly 0.5% higher than Friday's level, which was the pre-exit poll level. So yesterday's fall to some extent was also amplified by the huge jump which we saw, in the markets post the exit polls, and therefore, yesterday's fall obviously looked very big. The second thing which I would like to highlight is that till last week, I think most market participants would have been happy with the NDA getting 300 to 325 seats and the BJP getting anywhere over 270 seats. What actually came out is maybe 10% lower than expected. So the NDA has got around 292, 293 seats and the BJP around 240. So obviously BJP winning less than 272 seats has been slight disappointing. And I think that again, the expectations got raised because the exit poll almost predicted BJP to win anywhere between 350 to 400 seats. So the reality versus the exit poll caused the market to do what it did. The markets also have a way of behaving. I think when the expectations go very high, even a slight disappointment impacts the market. So with the exit poll of Saturday and the markets doing what it did on Monday, with the record increase in the Nifty and significant jump in a lot of stocks, particularly the public sector companies, defense, railways, and so on and so forth. I think when the disappointment happened yesterday, these were the stocks and sectors which also fell the highest. And to that extent, obviously the portfolios fell slightly more than what the markets have fallen. From the election perspective, obviously, there have been a lot of, WhatsApp messages, discussions, media, I would say conjecture, speculations rather than actually any view, talking about, or questioning whether the NDA will actually follow government or not, and whether Mr. Modi will return as the Prime Minister or not. And even if they do, what is going to be the thought process and the behavior, particularly of two key allies, which is Chandrababu Naidu of TDP and Nitish Kumar of Janata Dal United. As we speak, I think there has been a lot of clarity. One is the coalition is a strong coalition. It is not a weak coalition. We have BJP with 240 seats. It's not that, it's a coalition where the leading party is only 150 seats or 175 seats. It's a very strong coalition with the leading party 240 seats. And it's not a coalition of like 20, 30 small parties which have come together. Even if you have Chandrababu Naidu supporting the government, I think you are home. It's that kind of a coalition. And, the moment that view started to come in, which was today morning, and Chandrababu Naidu publicly stating that, he's well and truly, aligned to the coalition, I think the market started to take that in the stride. We saw what we saw today in terms of a sharp pullback of what we lost last time. I think as the day progresses, the coalition, the BJP-led or NDA coalition, is expected to meet anytime now. Hopefully, Nitish Kumar and Chandrababu Naidu publicly stated that they would get their letter of support, and the coalition will go to the president and make their claim for forming the government. And if it all goes in line, 8th of June is expected to be the swearing-in ceremony as far as Mr. Modi is concerned. Now, this will be the third term for Mr. Modi, so it's an outcome which all the market wanted. Obviously, it's not an outcome in the sense that the markets would have been happy with the BJP on its own having a majority and the coalition having approximately 300 to 325 seats, in overall. But it's not that bad an outcome. I think we are going to see continuity, at least for the next 5 years. And if you go back in history, in 1999, Vajpayee, the then Prime Minister, actually led a coalition where BJP had won only 182 seats. So it was a 20-party coalition where the largest party, BJP, had only 182 seats. And the other members of the coalition included the left parties, it included Jayalalitha of AIDMK, it included Mamata Banerjee of West Bengal and Lalu Prasad Yadav and Nitish Kumar and Mulayam Singh Yadav and so on and so forth. And they ran it very successfully without any hassle for 5 years. In fact, those were the 5 years where a lot of developmental work in India, including disinvestment and so many other things, telecom and infrastructure, including airlines and all, got done. So I think in India, coalition has been the order of the day. It's only in the last 2 terms that BJP had a majority on its own, but it was still running as a coalition. They had coalition partners even in the last 2 terms, though the constraint of not depending too much on them was quite evident because BJP on its own had 280 and 300 seats. However, as we speak, we do believe that there is more than enough possibility of this being very, very stable. The other thing we also have to remember is that outside the NDA alliance and the India alliance, there are 18 more MPs who are aligned to neither NDA or Indi. And there is a big possibility that 30, 40, 50, 60% of them might get aligned with the BJP-led NDA, which would, ensure that the overall number goes beyond the 300. The other thing is that the way people are concerned about the 2 parties in NDA, actually in the India alliance, you have a whole bhelpuri of almost 20 parties. And it is going to be tough for them to retain those 20 parties because most of them are swear enemies in their respective states. So AAP and Congress fight elections in Punjab. This time also they fought. They are bitter enemies in Delhi. Same way, left and Congress fight in Kerala, and left and Mamata Banerjee fight in West Bengal, and so on and so forth. So I think for them also to continue with this alliance infinitely is going to be a challenge. So I think all put together, we don't see an issue in this alliance continuing for the next few years. In terms of policies, I think Mr. Modi, in his address yesterday after the victory, clearly mentioned that the developmental work, the push towards a Viksit Bharat, which is developed India. So they have always maintained that by 2047, they want to make India a Viksit Desh, or a developed country from a developing country. And I think that continues. The focus on growth, development will continue. In fact, Chandrababu Naidu is also known to be a development or a pro-development personality. And he is also returning back to power after decades. And with the win in Andhra, I'm very sure that Chandrababu Naidu would first like to become the Chief Minister of Andhra Pradesh, grow the state with the help of the center. And I think to that extent, there is synergy in them continuing as a key coalition partner for a long, long time. As we speak, I was just watching TV. All the coalition partners are reaching the Lok Kalyan Mark residence of Mr. Modi, and hopefully there will be an announcement soon. But on the government policy, there is always a concern that because of this coalition politics and the fact that they have had some setback in the election, the government might become a little bit more populist. We don't know yet. There is a possibility that there might be some welfare schemes, but our view is that it is not going to be at the expense of growth and development. Luckily for India, as we speak, all the macroeconomic factors are, well, like a tailwind. All are doing well. We had a GDP growth of upwards of 8%. We had GST collections growing even in May by 10-11%. As we speak, monsoon has already hit Kerala and expected to hit Mumbai in a day or two. The outlook for the monsoon, the forecast for the monsoon is above normal. That should also aid both the farm income as well as bring down inflation. Crude prices have come down to $77 again, which is something which helps India from a fiscal deficit, from a current account deficit, from a currency perspective. And, overall, it is also expected that consumption should pick up because of one, spending on in elections, and second is because of a great monsoon. So I think in light of all this, even if there is a little bit of leeway which the government might have to make in terms of some populist measures, our view is that it should not be too much at the expense of growth and development. One other interesting thing, obviously, is going to be how the ministries are made. So I think for the next 2-3 days, that would again be something which would be a topic of discussion and guess estimate. We will come to know on 8th, the various ministries, how they have been handed over. Obviously, the coalition parties would, root for their pound of flesh. And I think that is where, in a coalition government, Mr. Modi would have to make some, I would say, adjustments, which is fine. You have to maintain the coalition dharma, but that would be something which the markets would also be looking at, like who's going to become the finance minister, who's going to be the rail minister, who's going to be the defense minister, and so on and so forth. Post that, the narrative will shift to the upcoming budget, which would be somewhere in July. I think we had an interim budget on February 1. Now we'll have a full-fledged budget. We will also, in that budget, come to know whether the government continues with its last 3-4 years attempt of focusing on growth, development, and so on and so forth. Just to recap, I think in 2023 budget, the outlay for infrastructure was 10 lakh crores. In 2024 budget, the outlay for infrastructure was increased to 11,11,000 crores. Our view is that it should continue to increase by 10% every year for the next 5 years. And that would mean that over the next 5 years, the outlay on infrastructure would be over 65 lakh crores, which is more than what we have spent as an economy over the last 77 years. And I don't think that is going to change a lot. From a market positioning perspective, I think till day before yesterday, it was all about defense, capital goods, railways, and so on and so forth. The narrative suddenly changed. I think today we saw a little bit of defensives, including pharma, consumption, IT, make a comeback. Obviously, banking also participated. But going forward, I think it is going to be a more balanced kind of participation as far as the markets are concerned. Our near-term market view, obviously, even yesterday, we released a note which was very clear that from Friday to yesterday, the markets were down only 2.5%. And year to date, even till yesterday, we were up like 0.7%. After today's move, year to date, we are up almost 4%. And as I said, since the exit poll or the day before the exit poll, we are now positive. So nothing has happened to the market because of the election. And I think that is one thing which we should be very clear about. A lot of times, just looking at the day-to-day movement, we tend to, take the wrong decisions at the wrong time. Our view is that this is going to be a phase of consolidation, at least for the next couple of weeks till there is more clarity. But we don't see the markets testing the lows what we saw yesterday. And incrementally, sometimes these kind of movements also act as triggers. There was a lot of money waiting both from domestic investors as well as global investors, and because of valuations and because of the big event coming up, they were just holding back. I think the big event is behind us. It is possible that today also we saw some good buying from global investors. I think this might act as a catalyst for new flows to come in. From Mr. Modi's perspective, I think yesterday again made a comment that he will do his best to grow India to a developed world. He clearly mentioned that if people work 10 hours, he will work 18 hours. And sometimes, as I said, these kind of events do create a fresh impetus and a fresh catalyst. Our view is that he would like to show that the next 5 years he can do wonders with the Indian economy and set out to do what he always has said. So if you look at the 2014 to 2019 period, which was the first term of Modi 1.0, it was all about cleaning the system, getting the banks on order, removing inefficiencies, corruption, particularly in the financial services and banking sector. The second term, which is 2019 to 2024, half of it went into COVID. And it is only in the last 2-3 years that you saw this massive push towards Make in India through the PLI scheme, defense indigenization, big push towards infrastructure, including railways, and so on and so forth. We have already seen global investors, global companies set up manufacturing base in India. I think with now very clearly a third term for Modi, we do believe that many more companies would look to setting up base in India. And to that extent, I think we do expect manufacturing to pick up in a big way. From a market perspective, we have been saying it for the last almost 8-9 months that we have to moderate the return expectations. Last 3-4 years have been great with 20, 30, 40% CAGR returns. Our view is that the markets are still capable of delivering mid-teen kind of returns. They are not expensive, but they are not cheap either. And therefore, our return expectations are based on the profit growth of the underlying companies. And therefore, our view is that if the Nifty earnings can grow at around 15-16% for the next 2-3 years, I think we should expect similar returns as far as the markets are concerned. Volatility is always the order of the day. Markets will keep on moving up and down. Markets are like cardiogram. It will keep on going up and down. And that is the reason we are alive. And I think these kind of choppy markets should not lead investors to be either scared and get out at the wrong time, or the momentum should not lead them to buy something which is not desirable on a fundamental basis. From a positioning perspective, we were always avoiding momentum, and to some extent, I think that did not work out first 5-6 months, because every day the shipyard companies, the defense companies, small PSUs and all were moving like crazy. I think very clearly in 1 or 2 days, almost 20% of the gains have been given away. And we do believe that this choppiness in at least that segment will continue, particularly where companies are trading at like 50, 60, 80, 100 P multiples, or even where there is no profit. And we will continue to stay away from there. The other interesting aspect obviously is going to be a more inclusive market. So rather than only 1 or 2 sectors participating, we do expect that a holistic approach to market movement might be there. And it was very clear today with pharma, FMCG, IT, the so-called defensive sectors also participating. I think markets are not going to be a one-horse pony of only the capital goods sector participating. It's going to be more inclusive, and particularly given the fact that there will definitely be some move from the government to ensure that people in the rural and the poor areas are able to live their normal lives. From a fund perspective, most of our funds are reasonably doing well. I think despite what has happened, I think year-to-date returns for most of the funds would be anywhere between 5 to 15%. And I think that is pretty much what we would expect as we move forward. From positioning perspective, sector-wise, we continue to be very positive, particularly on the larger private banks. I think they have underperformed big time, and their valuation, profit growth continue to be, I would say, very good. Among the other sectors, pharma is something which we have liked. Now in the given circumstances where, as I mentioned, the markets can be more holistic in their movement or more inclusive, I think pharma is something which we would love to look at and, if possible, add to it. Consumption, we have not been, a big believer largely in staples because of the valuation. However, we do believe that now with almost 18 months of no growth in the consumption, and also the fact there has been huge spending because of elections and monsoon outlook is normal, as also the fact that there might be some stimulus from the government towards ensuring that even the poor guys have cash flow in their hands. It makes sense for some consumption names to be looked at, and we are looking at them very closely. Particularly the building material side has not performed over the last 18 months. And again, our view is that there might be some stimulus in the budget for housing, for water, for electricity, and these are some sectors again which should do well. From a PSU's perspective, I think PSUs have done wonders. Whether it is on the defense side, on the railway side, even PSU banks, metals. PSU banks, we are still constructive. I think fundamentally they are doing very well, and valuations are still something where you can justify investing in the PSU banks, particularly the top 3, 4, 5 PSU banks. However, we are not very keen on the PSU defense, the PSU railways, and some of them because they're like building in everything which could go right for them over the next 5-6 years, and therefore even after this 20-25% correction in the prices, we would be in the camp of avoiding them. IT, not a very great outlook, but IT is one sector where it is very stable. Whatever they make, they distribute in terms of dividend. And I think therefore we have always maintained equal weight as far as IT is concerned. All said and done, I think we continue to follow the fundamental way of investing. We don't invest in loss-making companies. We are always investing in companies which make profit, where there is visible profit growth, and where valuations are in our favor. From an economy perspective and political stability perspective, we do believe that there is no reason for Mr. Modi to complete 5 years. As he is clearly mentioned even yesterday after the elections, the whole push towards development and Viksit Bharat, which is a developed India, will continue. We expect that the vigor will not reduce, but in fact, this would be taken up as a challenge, and the vigor will only increase. To some extent, I think whatever happens for good. Maybe, the government needed a little bit of nudge, which they have got. It would make them a little bit more, I would say, inclusive, more lending a ear to understand, the issues which the entire gamut of constituents of the country are facing. And, I think we continue to be quite optimistic. One disclaimer, we are always positive and always optimistic, so you can take it with a pinch of salt what you have said. But whoever has been positive over India over the last 5, 10, 15, 20 years has been the one who has had smiles and wealth and health in their favor. From a global perspective, I think things are turning out to be better. Both inflation as well as interest rates in the US and the Eurozone have peaked out. There is a possibility, at least over the next 6 months, for one interest rate cut, at least in the US. Yields there have already corrected to 4.34%. Crude prices have been very, very weak. We are already down to $77. Our view is of a weak crude price, a combination of US producing much more than what they used to produce. So US is already producing 13.5 million barrels, which will go to 15 million barrels. And also solar, wind, other renewables are becoming so cheap that globally every country, every company is looking at having a non-fossil fuel-based energy policy. And to that extent, if oil does correct further, nothing can be better for India than lower crude prices. In terms of flows, I think domestic flows have continued to be very buoyant. We don't see any reason why the flows should not continue. However, as I said, return expectations have to be more reasonable from a retail perspective also. So mid-teen returns, if investors are happy with, we don't see any reason why flows should not continue. Global flows, in fact, our view is that they should accelerate. I don't know what is going to happen over the next 2-3 weeks, but the moment the global investors get an inkling that we are looking at stability and a growth focus over the next 5 years, we are very confident that both FI as well as FDI flows should be pretty positive. What can go wrong? Obviously, every good story has some question mark. We do expect that there is no, difference of opinion, particularly between BJP and the two key allies, which is Janata Dal United and Telugu Desam, particularly the Telugu Desam party. And I think we do hope. The second thing is there are two key states which are going in for elections this year in the next 6 months, Maharashtra and Haryana. And both the states, BJP has fared rather badly compared to what was expected. And maybe, some policies might also be, some decisions might also be taken based on the need of the hour, at least for these two states. And to that extent, maybe just in the run-up to the election in these two states, we might have a little bit of more sort of a populist kind of a thing, in which I don't know if it is something which the markets don't like. You might have a small concern coming up again. I think other than that, we are pretty comfortable and confident. So all in all, an event which caused a lot of upheavals. Monday was a great day. Tuesday was a very bad day. Today again was a good day. But all said and done, the last 3 days, sum total is the Nifty has gone nowhere. We are exactly where we were on May 31st, 2024. And I think most of the funds would be also similar. So, nothing has been lost because of what has happened in the election, and we look forward to the next few months with a lot of optimism.